Cathie Wood is the multi-millionaire CEO of Ark Invest, and definitely knows her stuff as far as stock investment and the macroeconomy is concerned. Wood has earned a name for herself as Wall Street's best-known tech sector bull, and in recent statements, she's expressed concerns over what she considers to be grave short-sightedness on the part of the Fed. She's recently made a complete turnaround to admit that even she had been wrong about the trend of inflation all along, and that America does not presently have an inflation problem. Wood is now warning that the Fed needs to discontinue its rate hikes or risk weakening the U.S. economy even further. Want to know just what could have prompted this rather contrarian view from Wood, and how valid her opinion on the present state of the economy could be? Well then, keep up. Wood so far appears to be a lonely wolf on this course, as no other prominent personality on Wall Street has echoed her recent opinion regarding the state of the U.S. economy. In Wood's opinion, the slowing global economic growth will most likely make deflation and not inflation as is widely believed, the greatest driver of the financial markets and the whole economy as a whole. Wood has warned that the Federal Reserve has continued to flagrantly ignore obvious signs of a looming deflation and continues to hike interest rates aggressively as it tries to battle non-existent inflation. The U.S. stocks appear to have become unresponsive to the rate hikes by the Fed and are now on a steep bottoming freefall. "We don't have an inflation problem," Wood stated emphatically during her monthly market webinar late in June. To minimize the threats from the increasing inflationary pressures, Wood has gone against the contemporary census on inflation, making a case for two variables, productivity and the oil market, in proving her point. Wood is fiercely arguing that a lot of market analysts often undervalue the impact of productivity gains on long-term inflation. She strongly believes that the failure to take productivity into account will result in serious miscalculations in accurately predicting the pace and direction of inflation. Wood also expressed that although crude oil prices appreciated considerably since the war in Ukraine began, the rising crude price this time around would not be self-correcting as is customary, and not anytime soon. In her opinion, this situation will birth supply back into the U.S. economy and cause inflationary pressures to even out. With oil prices still high, Wood is convinced that the focus shouldn't be on inflation, especially as the rising crude prices continue to help cushion the pressures on the economy from inflation. While the U.S. became the largest energy producer globally in 2019 after its oil production peaked at 12.3 million barrels per day, Wood estimates that U.S. oil production would similarly hit 12 million barrels per day in 2022, before going up as high as 12.6 million barrels per day by mid-2023. In her opinion, the Federal Reserve risks weakening the economy even further for the rest of the year, especially with its cliché and backward-looking rate hikes. She believes that the Fed must necessarily and swiftly temper its policy, especially as the major economic indicators continue to be unresponsive and are below zero levels. Going by her analysis, the U.S. economy is already in a recession, and she'd been wrong to buy into the viewpoint of the Fed that inflation would unravel after price rises reach a peak point. In Wood's own words, "I can't believe it's taken more than 2 years and Russia's invasion of Ukraine. Of course, we couldn't have seen that. So inflation has been a bigger problem. But I think that it has set us up for deflation." Wood believes that everyone has been wrong all along about the trend of inflation and the path that it would take. To her, while the whole world continues to focus on inflation, the tide is fast turning. Deflation has become the key risk on the horizon, especially after her innovation-focused fund, Ark Investment Management, was badly hit by the rising interest and inflation rates. She has expressed serious concern that growth companies have especially seen their valuation plummet over fears of inflation and rising interest rates. Technology stocks have also plunged badly, losing as much as 80% in value. According to Wood, tech investors are now running for the hills and have largely retreated to stock market benchmark indices. She argues further that with preferred equity stocks now way oversold, the bigger risk henceforth is not inflation, but deflation. She also strongly believes that supply chain problems and the Russian invasion of Ukraine had disrupted the earlier narrative about deflation. with everyone believing that the dual situations would result in long-term high inflation. While there were obvious signs and precursors like major U.S. retailers such as Walmart and Target building up excess inventories, everyone paid no attention, and these retailers would have to clear these excesses now by discounting their inventory. These retailers have upped their inventories by up to 70%, while their sales are only up by 3%. Wood believes that leaving the inventories as they are would fasten America's plunge into a deflationary crisis. To Wood, America is presently experiencing a massive inventory cycle, one that'll see major retailers attempt to clear their shelves through heavy price cuts that hold the grave potential to birth deflation. Wood believes that the idea that these rising supply chain and raw material prices would bring about long-term higher prices now appear to be very flawed. From what's become apparent, Wood thinks that people should not be looking at the risks of inflation going further up, but the risk of inflation turning into deflation as it's increasingly becoming more likely. Wood also makes a point of 10-year government bonds yielding only about 3%, being another testament to the fact that the bond market was not buying the narrative of 5, 6, or 8% inflation. In Wood's own words, "I think the tide is turning, and it couldn't happen too soon for us." Meanwhile, some Wall Street analysts still believe that the economy is in a self-corrective phase, despite the rising prices. When asked what she thought of this little-known opinion, Wood responded, "This has been more than a correction. This has been the worst bear market I've ever experienced. And it's astonishing to me because we're at the threshold of the most explosive innovation age in the history of the world." While the Fed is presently hiking rates, Wood believes that it will aggressively cut rates in 2023, especially as the signs of a weakening U.S. economy become even more apparent. There has been a rather high rise of layoff notices across different sectors, as well as in claims for unemployment benefits, with all of these being core pointers to just how weak the economy has grown with the persistent rate hikes by the Fed. Wood expressed that household employment, a much broader-based survey of employment, has been flat for the last 4 months. Similarly, unemployment claims have been up roughly 50% by the second quarter, marking the fastest off-the-bottom increase ever in U.S. history. After 4 rate hikes so far in 2022, the Fed has announced that it's looking to raise rates even further in September. The Fed has expressed that the economy can withstand more rate hikes while it works to cut down inflation from the prevailing 4-decade highs. Despite the tough predictions by some of Wall Street's top guns, Wood firmly believes that the stock market is going to be just fine, and is presently on an impressive bull run that'll put smiles on the faces of many investors as long as the Fed can avoid plunging the economy into a recession. With the U.S. economy still battling the tides, several other renowned investors on Wall Street have expressed their thoughts on the U.S. economy. A few have even gone as far as taking very drastic measures, which have created a ripple effect on the stock market. You might want to check out this video right here to find out why Mr. Big Short opted to sell all of the stocks he owns, except one. Make sure to give this video a like, hit that subscribe button, and smash the notification bell to receive updates of when we post more intriguing stories about global finance and investing. Do leave us a comment as well, as we'd love to read your opinion on Cathie Wood's contrarian view on the state of the economy.